We have received an urgent warning from the Federal Reserve stating that there is a serious issue with global markets. It's not a quick fix or a little adjustment. This could drastically alter the course of every significant asset class worldwide, such as commodities, stocks, bonds, and especially cryptocurrency. Because the Federal Reserve's actions have an impact on the whole banking system, everyone will be affected. This is what will determine whether the next major cryptocurrency bull run is imminent or whether a revolutionary shift in the world is about to occur, seen previously. If you're interested in learning how the top 1% are now getting ready for this kind of Federal Reserve event, check out the XRP Millionaire Plan. You'll receive the entire strategy, a breakdown, an infographic, and a step-by-step video that demonstrates how the wealthiest people in the world are preparing for the future. Once more, that may be found in the remark that is now pinned beneath this video. Let's dissect this now because although most people are still unaware of what the Federal Reserve did, it is already fundamentally upending the global banking system. Interest rate changes were not the only action taken by the Fed. The amount of money in the US economy is directly impacted by the emergency liquidity backup they also initiated. Put simply, this indicates that stock and bond prices rise as the amount of money in the system increases. For markets, it is like air. Low liquidity makes it more difficult for riskier assets, such as cryptocurrency, to survive. Credit freezes and growth slows. When the money starts flowing again, everything changes rapidly. One of the toughest financial circumstances in contemporary history for the past few years. In order to maintain stability following the epidemic, the Federal Reserve produced a record quantity of money. It was one of the most volatile periods for money that we have ever witnessed, with a lot of money pouring into the market. But that storm came at a price. The Fed had to slow things down when inflation soared. They swiftly increased interest rates, which drained money and essentially killed the markets. After years of tightening, the Fed recently released its eyes. Since the central bank is intervening in this case, they are aware that something more significant is happening behind the scenes. This is supported by the evidence. The pipes in the banking system are already cracked. Occasionally, the Fed must intervene to provide assistance. That's precisely what happens when banks are struggling to collect funds. What is the purpose of this move? The repo market, an acronym for repurchase agreements, is the crux of the matter. This is the foundation of short-term bank loans. When banks urgently need cash, they turn to the Fed. Right now, the demand for overnight repos has increased to its highest point in nearly 5 years. That is a huge amount. Why? Because when repo activity spikes, banks are running low on cash. This indicates that the system has less money. The Fed will begin injecting money into the economy to satisfy that demand. This is the first indication that their monetary policy is changing from tight to loose. In the past, since the beginning of that change, Bitcoin and the cryptocurrency market have flourished. Let's go back in time a little. The repo market became quite active in 2019. The Fed has to intervene and inject money into the system to keep it safe. Bitcoin started a significant comeback rally just a few months later. The Federal Reserve gave the largest boost ever when COVID struck in 2020. One of the strongest bull runs in the history of equities and cryptocurrency was triggered by that injection. Bitcoin is always returns when funding does. Right now, we're witnessing the identical configuration once more. We're not discussing minor adjustments to the regulations. In this instance, the Fed intervened swiftly, decisively, and early. We will not wait to find out. Before the system malfunctions, this must be done. What is the most crucial aspect? This occurred immediately following the Federal Reserve's announcement that it would no longer pursue 2% inflation. It's a pretty powerful signal. The Fed has stated that it will maintain tight control until inflation reaches 2%. Years. They haven't yet attained that figure, though. It has remained in the range of 2, 3%, 5%. So why alter the objective? Since they are aware that they cannot continue to pull together indefinitely. It is too much for the machine to handle. The inflation rate is sufficiently near. Cash flow is under increased strain, and growth is slowing. The Fed has decided against tightening money in favor of safety. They have decided to allow prices to increase in order for them to relax policy once more. The blink is that. In real time, the dominoes are currently falling. They first modified their inflation target. They then stopped removing assets from the system, which means they stopped tightening the balance sheet. Emergency liquidity flows are now returning to the repo market. The Federal Reserve is gradually expanding the money supply once more. Well, if you've been interested in cryptocurrency for a time, you already understand what that entails. All significant cryptocurrency bull markets have occurred when monetary. The policy was not strict. It's not an error. It's the money flow. Buyers seek chances with varying degrees of upside when they have easy access to large sums of money. They then discuss new concepts, risk assets, and digital sources of value. Bitcoin, Ethereum, and XRP all perform exceptionally well over that period. The current state of affairs has a striking resemblance to the start of those previous bull runs. Liquidity injections are increasing. The Fed has decided against implementing the most stringent regulations in years. The bond market is already pricing in a large number of future rate decreases, and the pace of inflation has decreased sufficiently to warrant decreasing. However, the most crucial indication is the haste. And this time, the Fed won't wait for the system to collapse. They're attempting to halt it. This last-minute action is crucial because of this. The figures of the repo market show that banks are short on dollars. They immediately need money. Thus, it doesn't become an issue. The Fed is acting immediately. Compared to 2020, That represents a significant shift in behavior. The system nearly collapsed before the Fed took action because they delayed too long. Before the cracks widen, they are investing in the system this time. As investors, what does that signify for us? It indicates a shift in the money flow. And when it occurs, everything moves. Real estate, stocks, money, and cryptocurrency, but primarily cryptocurrency, because compared to other asset classes, the value of cryptocurrencies fluctuates more quickly and forcefully. It is the most obvious indication of the world's readiness to take chances. When large sums of money flood the system, cryptocurrency rises the fastest. We have the opportunity right in front of us. This is only the beginning of what may be the next significant increase in wealth. Additionally, the market that benefits the most in the early phases of a liquidity rebound has always been cryptocurrency. Every signal from balance sheet stabilization to repo injections is conveying the same message. The Federal Reserve is preparing to ease business conditions once more. They're not getting any tighter. They're fascinating in a subtle way. Because of this, it's critical to comprehend this now before anybody else does. Bitcoin may have already overcome resistance levels before CNBC broadcasts about liquidity infusions. Nobody anticipated that it would occur so quickly. The most crucial thing to keep in mind is that the Fed has made its decision. It prioritizes market liquidity and stability above strict inflation targets. And any modification, no matter how minor at first seem, fundamentally alters the flow of money because once money begins to flow again, it doesn't stop immediately. It accumulates. It keeps things going. Furthermore, price increases everywhere are driven by momentum in a society as indebted as ours. And now that energy is beginning to move, repo data, money market movements, the dollar index beginning to decline, and yield curves gradually inverting once more are all indications of it. The next phase of monetary easing is what they all indicate. Because of this, the Federal Reserve's extraordinary action may represent a sea change in global markets, particularly the cryptocurrency industry. Examining this emergency measure in greater detail reveals that the Fed is secretly boosting global liquidity, though it isn't yet stated in every headline. The facts make it abundantly evident. Through the same mechanisms that deliver goods to global markets, the Federal Reserve is injecting new money into the economy. Since liquidity is what actually drives prices at this time, this is the most crucial factor. Consider it in this manner. Businesses rely on loans to stay afloat, and loans require funding to function. When banks, companies, and people are more inclined to take chances when businesses have a lot of money. The markets can breathe again, venture capital begins to flow again, tiny enterprises receive funding, and large corporations borrow money to expand. However, everything becomes smaller when there is no more money to spend. Asset prices begin to decline, individuals lose faith, and less money is invested. That has been the case for the past 2 years. The cash system was depleted by the Fed's stricter regulations. Finding funds became more difficult with each rate increase and each balance sheet. The economy lost money as a result of reduction. However, the equilibrium is now shifting backwards. It always does. The tightening period is never permanent. The system cannot function for very long without fresh revenue. This is the reason this moment is so powerful. Right now, liquidity is taking a different turn. Banks require additional short-term loans as a result of the Fed raising overnight repo payments. The Federal Reserve is not ignoring it. They are providing it to you. This marks the beginning of what will ultimately be a protracted easing cycle. It functions similarly to the spark that ignites a fire. It starts out little, such as short-term liquidity programs and repossessions. However, it expands over time to incorporate large waves of stimulus, asset purchases, and rate reductions. And within months of the beginning of this process, the price of Bitcoin soars. Let's connect the dots and get a larger image. The most recent significant